Mitul Kotecha, who's Senior Emerging Market Strategist at TD Securities, joins in with his perspective on the markets. Mitul, it's great to have you on the show. Thanks very much for taking out the time. While there is concern about China's slowdown, I think 6.5% in specific, not 6%, but 6.5% is an okay number given China's GDP size. What is really driving sentiment right now is the trade tariff truce talks and the fact that they're finally being able to work out a deal that impresses both the countries at the current juncture. I mean, it works for both the countries at the current juncture and completely does away with the trade gap that there is in the current structure.
Yes, well, I mean, I think it's a difficult point for both. I mean, while there may be some progress towards actually trade agreement, and it's likely that China will agree to buy more U.S. goods. I think they've been highlighting this for some time. Where there's real sticking point is on intellectual property and accusations of theft of technology and more significant structural issues that I think the U.S. administration are still very wary of in terms of wanting to see some evidence that China is going to back away from these issues. So while attention is on Liu He's visit to the U.S. at the end of this month, I think any deal will be a partial deal of sorts, and I think the bigger issues may still be left on the table.
Mitul, the general view is that China will slow down, and the sugar rush what US economy has enjoyed, that also will wean away in 2019. Are we looking at a very marked slowdown in global growth for 2019, or it will be a measured one?
Well, I think, as you say, there's definitely going to be the two biggest economies slowing down, and clearly that's going to have an impact globally. We're already seeing that across the board in some of the sentiment surveys, just for example, in emerging markets, where the PMIs are all sort of pointing lower. Europe itself is also slowing, and some of the data has been quite weak there. And so we will see a marked slowdown in global economic activity this year, but it won't be a dramatic slide. I mean, the U.S. growth will probably end up being more in a region of 2 to 2.5% rather than 3%. China is already enacting major targeted stimulus and fiscal measures, so it will be a soft landing more likely in China, but no doubt growth this year is on a slowing trajectory, and that will have an implication for economies elsewhere, including in India and other countries. Trade in particular will still continue to slow despite any trade deal between the US and China. So I think the outlook is certainly more negative in terms of the global economy.
Okay, Mitul, we'll leave it at that. Thanks much for taking the time out and speaking with us.